Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Euro dollar. A bullish white Mariposa and second bullish white soldier yesterday after prices punched up through and closed over some considerable resistances after testing then last week. That was after testing last week and this to make new higher and a higher close not seen since June 2021. These resistances were the twin downtrends of the July 2008 to date downtrend and the May 2011 to date downtrend. That's at 117 and 3/4 and 117.81 respectively. I'll probably have to reline them at some point, or maybe just get rid of them because they're so shallow at the moment. The June high at 118.29, and the June 2018 high at 118.51. We also made a significant push and close over the dark blue neckline, currently at 118.21. This is the familiar resistance for the significant combined June to July head and shoulders top, which also had a double top formed from the head and the second shoulder. Above all, it was another interesting close over the bright red upper trend line of the early July to mid-September descending expanding wedge pattern, which is currently 108.12 to 116.92, and thus it gives us the primary target X for this pattern up at 120.63. and a secondary harder to achieve or to reach even target X1 up at 121.36. So what have we topside that can stem the flow upwards? Well, beyond the June 2018 high, we have a fairly free area bar two potential obstacles. The first is the bright pink neckline, currently at 119.32 of the April to May 2020 reverse head and shoulders neckline. Not a major resistance, but one that is still there. The second is even older, the mauve lower bull channel line for the 2023 bull channel, currently at 119.29. Neither of these is that impressive, but they are still there. Beyond that, we have the fairly shallow 2018 to date downtrend, currently at 120.10. Finally, as I've said now repeatedly since about March this year, we are set up with nearly 9 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, a reactionary move back down through the June 2018 high, but seemingly not willing just yet to push down through that dark blue neckline again. Cable, aka sterling against the US dollar. Second bullish white soldier yesterday and a follow-on higher to the previous session's bullish engulfing pattern. Okay, so the market had mainly been moving sideways since early August, caught on a topside within a congestion band between the September 2020 high at 134.83 up to 135.81, which is just below it the green short medium moving average, currently at 134.75. plus the mauve medium moving average, currently 134.76. This sideways action caused the market to exit on the top side out of the recent bright red early July to early August descending expanding wedge pattern. But the market had until this week been in no hurry to try and achieve the topside targets. However, high yesterday of 136.71, I'm going to say the market reached the primary target X above. That's in the 136.78 area. However, we still have the secondary harder to reach target X2 up at 137.88. Yesterday prices got a little bogged down in the next overhead congestion band. That's between 136.21 and the February 22 high at 136.43. Now punching through, but barely closing over, just over that congestion band. Further up, we have another congestion band between 137.47 to 137.88, and that's containing the January 22 high at 137.47, the 2021 to date downtrend currently 137.62, and a combination of the 2025 high and the secondary target X2, my apologies. Finally, much like Euro-dollar, we are set up here for this market to make that rarest of patterns, an annual key reversal, a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then would be on. Anything in between will have a lesser outside year pattern. I'm at this stage not going to contemplate what the results at the end of the year will be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. Now, so far today, a reactionary move back down, back within the smaller 136.21 to 136.43 congestion band, but so far no further lower. US dollar against the Japanese yen. A bearish black Mariposa and second bearish black crow yesterday after the previous session's counter-to-counter bearish dark cloud cover pattern. The market continues to be capped by the Fibonacci congestion at 148.68, possibly stretching down now to the Fibonacci congestion at 148.11. The congestion at 148.68 is also this time reinforced by this very slowly declining gold long moving average, currently at 148.64. With higher up the 50% Fibonacci line for the July 23 to July 24 move at 149.61. Below, well, we did have Fibonacci support, and it had recently been quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. But this gave way yesterday, and prices dropped down to halt at the next support, which is the mauve medium moving average, the rising mauve medium, well, sort of rising mauve medium moving average, currently 146.19. Overall, we are still in between the dark blue middle time below, currently at 144.24, and a dark blue upper time above, currently 154.84, of the important, large, shallow, and longer term, early July 24 to mid-January 25 bearish shift pitchfork. Now, so far today, a reactionary move back up, but unsurprisingly halting right now at the 146.69 Fibonacci level. I'm actually now considering whether we have to extend the recent small rectangle pattern down to the mauve medium moving average or not. US dollar against the CNH, the offshore Chinese yuan. A bearish closing black Mariposa and second bearish black crow yesterday after the previous session's counter-to-counter bearish dark cloud cover pattern. It was a continuation of a fresh move lower, as prices now seem to be moving away lower, below the dark blue neckline extension of the January to April 2022 reverse head and shoulders bottom, currently at 713.25, as well as the bright red lower trendline extension, currently 713.88, for the mid-January to late April 2025 descending triangle, which seems actually to be the more substantial resistance. A little higher up, and we have Fibonacci congestion at 714.95 and 714.48. That can be regarded as one single congestion area. Meanwhile, looking below, well, we have some free air all the way down to the congestion between 706.32 to 706.57, made up from the 50% Fibonacci line, the October 22 to April 25 move, and the June 23 low, respectively. However, the market has, until recently, seemed shy of testing that far down, but that is seemingly changing. Finally, a strategic observation once again, and one I'll continue to be making here. Please note how the long moving average, currently 723.26, has been, despite some up and down waves, relatively flatlining for quite a while. So if prices do stray too far from it, then they seem to be brought back towards it, and that applies in either direction. So far today, a limited further attempt low for new low, one not seen since November 2024, but a move back up to yesterday's closing area at the moment. US dollar against the Brazilian real. A fifth bearish black crow and further lower close below the purple May 24 today uptrend, currently at 540.17, which unless things change I'll shortly realign. Plus it was the lowest close since early June 2024. It's been a concerted attempt at a break lower, though it has run into a lot of support down here, which so far it has overcome. Yesterday, prices pierced and closed below the 38.2% Fibonacci line for October 19 to December 24 move at 532.15. We have another 38.2% Fibonacci below at 527 even from the October 18 to December 24 move, and then the 61.8% Fibonacci of the April 22 to December 24 move at 524.07. All this action once again shows the resilience of one of the showrunners for this market since April, and that's the overhead bright red upper time, currently at 540.20 of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. US dollar against the Mexican peso, an eighth bearish black crow yesterday and continuing move lower. There's also another consecutive close below the recent rectangle pattern formed from the cap on the market, the congestion between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and also 1885.40 being that area, that's the top side. And below by the very significant pairing of the February 2020 low at 1851.71 along with the 61.8% Fibonacci line of the big old April 21 to April 24 move at 1850.81. This had been a narrow congestion, but one that had held up the market since early July until last week. Thus we had a primary target X which was reached yesterday down at 1831.80 and a secondary harder to reach target X1 down not too far below at 1816.20. Interestingly, apart from the lesser Fibonacci line at 1817.60, we seem to have little support now, right now until the July 2014 low at 1859.58 and the August 2017 low at 1856.93. Now, so far today, nothing much. We're hanging around yesterday's close.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.